Hi, this is Randy Finney with Right Side of the Chart. This is a mid to late trading session update for Wednesday, June 19th, 2019. The video might be a bit premature because the FOMC meeting our announcement was just out about exactly 20 minutes ago. We still have the press conference coming up, but I do want to go over, there's some developments again. This to me is what I call post FOMC noise. It is almost guaranteed to get at a big meeting like this. In fact, here, let me show you. If you're a silver member or gold member, just not in the trading room today, here's a chart I posted a couple hours before the FOMC meeting, and just to kind of show you what usually happens. We were right here at the time, so I just had us floundering around right up to 2 p.m. Here's your hour marks, and then something like this. This is what you get on these things. You get a big rip up or down. It could have gone the other way. But what I say very often, and it's almost always, it seems almost always, the initial reaction, whether it's a rip or a dip, is often faded, and even then the subsequent reaction can be faded as well. So this is something along the lines of what I see happening today as both investors as well as the algos parse through all the data, and especially with the press conference, they want to hear what the Fed has to say. They look for certain keywords. They hang all over the statements, but so that's what what we're going to have for the rest of the day. And I think the dust, usually I say the dust settles by the next day, which is tomorrow, Thursday, maybe Friday, and almost certainly into next week. The market will have chosen a direction. So that was what I was showing. This is what actually happened. Same thing, sharp rip up immediately following the reaction, which has so far been almost a little more than half of it faded already. And I think that's what we'll see. And eventually I'm favoring this scenario. And I'm going to give you some sell signals, some solid levels, instead of just taking my word for it. And I'm not, look, I can't tell you with certainty that's what's going to happen, but I can give you some levels that will sharply increase the likelihood that it will happen. Okay, so what we're going to do is flip over to 60-minute charts. Just stay there. I posted these, updated these right before the announcement today. That went out in a front page post, so if you're listening to this video, you probably already got that. And what we have now are some wedges forming. Remember, I had that alternative scenario here of a move down with one more marginal new high, and as we kind of got locked into the Fed grind before the meeting, and then we had the Trump / Draghi pump the other day, the 1-2 punch. Draghi, saying he was going to, he's leaning towards another rate cut there, and the ECB, or expanding the bond program, which is their quantitative easing, and of course Fed becoming much easier. So you had, and of course Trump's tweet was all about, obviously non-specific as always, but progress on the trade wars. So that's that, and that's what it put us into these nice. I added a trend line here. These are just nice, clean, bearish rising wedge patterns, and I cannot promise you what happens from here. I still lean towards the same scenario, but what I can say is we don't have a lot of reactions on the lower trend line, but enough. So far we have 1, 2, almost 3 there, and another reaction here. Plus it's that 185.95-ish support that has been an important level for me so far. And as I've been saying for weeks, I was long through most of this, got out, started scaling in short up to, and still not above 183. And will not add. That was my level where I'd be concerned, as I said before, about stopping out. And then as we got locked into the grind, I said recently, I'm going to sit tight. I'm going to sit tight through the FOMC announcement, which I still am. And at this point, I'm still not adding, but I'm not concerned right now. We'll see how today goes. Tomorrow, once the dust settles, if we start to rise from here and continue up, because again, as I like to say, support is support until unless broken. So right now we have a nice uptrend line right there forming, and the uptrend line of course is support as well, again, is that 185.95-ish level, which you can see is contained since that little news-induced pop the other day. That's what's held this level. So it's that simple to me. That would be a sell signal, especially an impulsive move through below that level. We have a big old gap to be backfilled, so that would be a minimum target right there. But if we backfill that gap and we have an impulsive move down, that will be a pretty good buy. Pretty good sell signal in my opinion. So that's what it looks like on QQQ. Here's what it looks like on SPY, almost identical. And SPY, again, these are levels that were here in advance, 291.40. You can see it's acted as support. It was that reaction high. That Trump pump tweet in the Draghi news the other day popped us above there, and we've come back and tested it perfectly today. So look at it this way. Basically, if we undercut today's lows and we start to move impulsively lower, that will give us a sell signal. We'll have broken support and both price support and trendline support. And again, the natural target would be a backfill the gap. But if we backfill that gap, we already have a sell signal. So even if we have a reaction off there, I favor more downside. Now let's just move over to the FANG stocks, because as I always say, the stock market is simply a sum of its parts. Now you can add up tens of thousands of stocks, that's the stock market, but it doesn't matter your micro caps and small caps. They can, any one small cap stock can go up 500% in a day and it won't move the needle on the stock market. What moves the needle on the stock market are the FANG stocks. They are, it's the acronym I use, FAAMG. Those are the 5 largest companies in the world, 5 largest companies in the S&P 500 and NASDAQ 100, although actually one of them I think might not be in the S&P. But here it is. We have very similar technical posture on these FANG stocks. And again, I'm on the 60-minute chart as we do on the markets. I have the trend line or the wedge drawn this way with Microsoft, but you can see clear divergence, confirmed divergence. We have a bearish crossover recently, but we need these sell signals. So like I always say, a trade setup and an active trade are two different things. A setup is a trade waiting for an entry to be triggered. Now again, I'm already short. I have dry powder to add, as I said, but I'm not going to add until we start getting some sell signals and we fall back below that level on QQQ. But I'd also want to see these guys break down, at least 3 out of the 5. Maybe we'll go over 6 or so. I want to cover Intel as well. So you want to see, that should be red candle. You want to see a big drop down through there, and then the next sell signal will come if Microsoft takes out that 131 level, which is support, and so forth and so on. So that's Microsoft. Here's Amazon. Same story, nice well-defined short-term uptrend line, divergent high, the negative divergence, so we need to break that level. And my guess, if one breaks, if you get an impulsive move down on QQQ, the majority of these stocks will break, because again, they are QQQ. So APL, Apple, nice, clean, bearish rising wedge. Remember, Apple was a long trade recently. Oops. Yeah, sometimes these charts disappear when you reload a new one with the video capture software. There it is. All right, so here's Apple. Nice, clean, bearish rising wedge. Remember, we had a long trade entry back here. Had the stop clipped, but I know a lot of you stuck with it, and good for that. We went all the way up to that third target right here. Hit my third price target. Went a bit higher. Just like this meshes with what happened on QQQ. We just slightly exceeded by a hair my uppermost expected bounce target. Didn't quite get to the point where we made new highs yet, or those levels that'll really start chipping away at the bearish scenario on the charts. What I mean by that, if we do start going higher from here, if we don't break down soon, the bearish case starts to chip away with every percent higher. It is not eliminated, but the near term, the case for a near-term correction, near-term drop, or really what I'm looking for is not just a correction, it's a major trend reversal. That starts to get chipped away. There's just too much in the long-term charts that's going to change anything anytime soon. So I want to say that and be very clear that the market could pop to new highs soon. I'm talking the S&P, possibly even the NASDAQ. There's still some indexes that are quite a bit below. It's not going to do much, if anything, to change the very long-term outlook in my expectation for a substantial drop and or bear market in 2019, 2020. But it could change the near-term technicals, so therefore might have to get out of those short positions. So here's Apple, and again, just a beautiful bearish rising wedge pattern. Like everything else, just awaiting an impulsive breakdown to trigger a sell signal. But if we don't get it, see what can happen with wedges or any trend line. Trend lines are support. Maybe we continue on up here. Maybe this wedge expands. Maybe the divergences keep intact, and we do get a sell signal to higher levels. I don't know. All I know is I want to be on a lookout for a breakdown below this trend line on Apple, as well as a majority of those other stocks in QQQ. Again, not just one of these. Even if you were planning to short Apple on that wedge break and you shorted a breakdown, but the rest of the fangs didn't break, nor did QQQ, what's probably going to happen is that'll prove to be a false breakdown. So you want confirmation on all of these. And a couple more here. There's Alphabet, GOGL. Here's a trend line like this. You can draw it like that. You want to be liberal, come in and capture it like that. I have more reactions right here. So to me, this looks like a breakdown and a back test, but there's an example why you don't short one without confirmation on the index, on at least on QQQ and or some of the other market leaders. You can get a breakdown like that, we go nowhere. But we're also, there's some support or former support, now resistance there. So Alphabet's broken down. It's in a precarious position. If things go the way I think, this one should continue down. It should probably lead the way down. Although, Apple has a little bit more to fall. It's rallied more off the lows, but I'm just pointing out these technicals. So there's one out of the 5 or 6 that I'm going to cover that has broken down, but needs confirmation from the sector, from the index, from QQQ and the other FANG stocks. A couple more here. Facebook's stronger than the rest. That's probably due a lot to their new cryptocurrency coming out. We'll see how that plays out. I don't know enough about it, to be honest with you. I haven't spent the time reading up, but I can just say this. We'll see how far. The government already has their crosshairs on these big companies. The U.S. government, the only way, long term, the only way they're going to print the only way they're going to get out of the fiscal deficit that they buried themselves in is by technically defaulting. That means printing money, debasing their currency to, they call it a technical devaluation. They're not going to default on their bonds by not paying. They're just going to print more bonds down the road to service the existing debt load. And what that does is it weakens the dollar. I don't think the U.S. government's going to stand for an alternative currency. Again, I don't know much about that Bitcoin. I mean the Facebook's cryptocurrency, the details on that. But we'll see. We'll see how that plays out. Either way, let's forget about that. That's fundamental analysis, and I heard that's at least a year away, or about a year away, even if it happens. So for now, let's just watch this trend line, and that's the common theme here. All these guys have nice, clean trend lines. Facebook's the only one without a divergent high, so it's probably the best looking that I see right now of the lot. Cisco already put in a divergent high right here, broke a well-defined uptrend line. You zoom in a little bit, you can see we broke down and back tested. I'm covering Cisco because it should be about the number 5th or 6th largest holding here, or 6th or 7th I should say. Breakdown, back test, just a beautiful display of technical analysis with a nice clean uptrend line, the divergent high, and then so far it's in correction mode and probably going to continue lower. And one more I wanted to cover, Intel. Intel, same story. I need to add the divergence lines right here. You can already see them on price. Price is making lower highs. This was also an official trade. We never had our stop hit. This one we hit profitably. I revised it. I had a former T2 right here at 48.16. We hit a high right around 48, almost hit that, but I closed it out right here, and I'm glad I did. I felt good about that. Pulled it in early. Sometimes I'll do that, and then stock immediately corrected from there. So we had a nice exit. Sure, we left a few pennies on the table so far, but again, divergent high, and we could probably even add a downtrend line here to watch as well off the lows. Yeah, we have enough reactions there certainly to add a downtrend line. So let's zoom in, and here's what it looks like on Intel. So these are the levels I'm watching, and again, it's many things, not just these 60-minute charts. It's all what's happened on the longer term charts where we're at. That's still I still lean towards this scenario. So as I think you probably got the message. I sent a post out. I'm temporarily revising the stops on the TVIX trade, and I might even, we'll see what happens today. If I temporarily suspend the stops on QQQ and that TVIX trade, I will do so with enough time that you get the email notification. Remember, if you're a member of the site, you should get an email every time a new front page post is published. That's all. New trade ideas, updates on trade ideas, any market analysis, anything that's posted on the front page or the blog page of the site. And if you're not getting those emails, let me know. You should be automatically enrolled on that list once you sign up for the site. So that's it. Those are the levels to watch, and let's just, while we wrap this up, let's see what's happened to QQQ since. There it is, more of that post FOMC noise, I call it. A rip followed by a dip. I probably should have color coded these lines different. Another rip up. This is what you get, and that's why you don't chase the initial reaction. Anybody that tried to get that, you couldn't really get in front of that. You could have had, if you hit a buy order, if you had it pre-filled, we went up almost instantly. You probably would have gotten filled here, then you would have been underwater here. So as I always say, this is noise. You can't beat the machines. These are algos, algorithmic trading programs, high frequency trading programs that can rip and dip this market real fast. So let the dust settle and keep an eye on those levels I said, and we'll pick this up either later today or tomorrow. I'll probably do a closing market wrap. May or may not. I wanted to run out. Yesterday I ran out for an appointment. I had to take my son on an appointment. Today I need to have an errand I need to do. I can probably do that after the market. But I personally don't do a whole lot on a day like today. I let the dust settle, see which way this thing goes by tomorrow, Friday. If these wedges are going to break down, they should do it soon. Not to say that they can't push higher, but that's what I'd be looking for. So, and if they don't, if we start to move higher tomorrow into Friday, I'll make a decision before Friday's close on what to do, with the positions I have, and or whether I'm going to modify the suggested stop on the QQQ trade. Which, let me look at that real quick. This is it. Remember, this QQQ trade, the last official trade we had on it, the intent was to game, the initial leg down, or part of it. We caught, part of the initial leg down there. But this, and that was based on a 60-minute chart, a 60-minute wedge, not so different from the one I just showed you. Whereas this trade, if you notice, I moved out to a daily time frame. This trade is based off a daily chart, and I have much larger downside targets. So that was intended as a relatively short-term, multi-week swing trade, whereas this one is intended as a longer-term, multi-week to multi-month, and at least swing trade with the potential for additional targets. I'm not going to add any additional targets unless we start to move down soon. I mean, look, we go up much higher, it's going to hit the stop. So I'm leaving that stop right now on a daily close above 188.30. What that does, it helps to, decrease the chances they clip your stop on the intraday post FOMC noise, meaning, we have a run up into the close or before the close and a move back down. And I don't know, depending on what I see, I'll probably leave this one intact, but if I do make any changes, I'll get that out in time, at least 20 minutes or so before the close if possible. As of now, we'll just leave it here. All right, this has been Randy Finney with Right Side of the Chart, and as I said, anything big happens today before the close, I'll do another update. Have a great day.